Hi, this is David Daughtry with Copperwind Financial. Another one of the Dave's Talks series that we've started. What I wanted to talk to you a little bit about today actually deals with a lot of the same stuff that we've looked at in the past, as far as looking at how political situations around the world impact markets. And what I wanted to show you here is with the recent problems in the Ukraine, what you saw, and I'll do a couple of things here so that we can see it one at a time. This is the S&P 500, and when things started to go badly in the Ukraine, what you saw with Russia stepping up really support, you saw a dramatic sell-off in the S&P. Went from basically 1990 something down to about 1910. Now, at the same time, because people get concerned about what's happening, and especially the sanctions and how they will impact Russia, and then how Russia will retaliate against the U.S. and against Europe on the sanction side, and we're starting to see that. But if you look at the same time, the other thing that occurs here is this is TLT, which is a long-term treasury. And at the same time that you had about nearly a 4% drop in the S&P during a very short period of time here, you actually end up with about a 4% gain in TLT because it's treasuries, and people will sell out what's a risk asset, which is the S&P 500, and they go to safety, which are treasuries here. And so you see that nearly every time. Now, if we look and say, okay, what about the Russian market? And this is an exchange-traded fund that goes along, that follows that. And even though it hurt our market, when you look, it crushed the Russian market. You actually look here and you're down 12%. If you look at that year to date, it's been down more than that. This is when the Ukrainian stuff first started happening, and then a recovery when they thought, oh, it's not that bad, and then as it started occurring again, you saw another big downturn here. So when you look at how that impacts, basically the whole global market, you see when something like the Ukraine is occurring, you're going to see a lot of sell-off in risk assets, which would be stocks, and you'll also see a bounce, which is nearly always on the bond side, and usually high-grade bonds, which typically are going to be like looking at the U.S. treasuries. So one of the other things that you're also seeing is you're seeing some concern about ISIS, the Islamic revolt stuff that's occurring in Iraq and Syria, and that is really driving concern about ultimately where we have oil, which I talked about before, as far as the looking at Iraq's oil situation. So it's interesting to see some of that, and here it goes back to over the last month or so, I guess 3 months. But in Iraq, it's and Syria, there's a couple of things that are occurring there. One, will it pull the U.S. into that quagmire, which it seems like it is? Will that ultimately hurt some of the global trade? And will there be a problem from an oil standpoint? And you initially saw some rally in oil prices, but most of that's gone away. I look at, let's see, USO. You saw the rally here, and then you've seen oil just sell off significantly as people were basically just looking at that risk and say, we don't care, we don't think it's a big deal. So I think what you're going to see here is you're going to see some volatility that will pick up, but right now there's so much liquidity sloshing around, and what I mean by that is money being lent out by central banks or printed by central banks, that what you're seeing is that most investors are saying there's plenty of money around, so I don't care about the risk, which ultimately will end badly, but it may be a long time in the future before that actually occurs. So anyway, we're watching it, still fully invested here, both on the bond side and the stock side. but it does concern us when the markets are not really responding to the risks that are out there. But we've seen that for the last 4 or 5 years. So right now, fully invested. Have a good day.